Right, so those with mortgages and credit cards are set to be hammered by the Bank of England once again as they prepare to raise interest rates for the 10th time in a row in the name of bringing inflation under control but choking off economic growth whilst they do it. This guy at the top of the Bank of England, Andrew Bailey, appears to be absolutely insistent that ensuring people have as little as possible to spend is the way to bring inflation down. All right for him on his overbloated wage, but when people having more money in their wage packets has absolutely nothing to do with the soaring inflation that we've seen, it's been the result of excess profiteering and the Tories printing money like water to compensate rather than take on the profiteers as well as clean up their own messes. Bailey is frankly as much a problem to us as this Tory government is. Interest rates are to hit 4%. For those who will bleat and have been bleating about issues like this, well, back in the 80s, we saw double-digit interest rates and we survived. They were completely different times when your money went a lot further. £100 in 1980 went almost 4 times further than it does now, worth the equivalent of £378 now, according to the Bank of England's own inflation calculator. In 1980, interest rates were at 14.8%, but because debt is so much higher now, mortgages are so much more expensive than they were then, that 14.8% interest rate back then is equivalent to 3% today. Interest rates are now at 4%. It's worse now than it was then. And it's an important point to make because so many times have I heard the back in my day line, and it's not a direct parallel. Interest rates going up makes debt again more expensive. Mortgages will go up. Credit card repayments will go up. It hits ordinary people in their pockets and never those of the wealthiest who don't need credit or mortgages. They are beyond the debt trap that's been created. But when it is ordinary people having more to spend that drives the economy, the word growth, it's not a good one. You can't grow economies indefinitely. Resources are finite after all. But for an economy to be strong, let's call it, and support its population rather than the other way around, people need to be able to spend. It's one of the key reasons I spoke about in a video from the other day that the UK is entering recession rather than recovering from financial difficulties that the pandemic created, as every other G7 nation is. Even more ridiculously, the Bank of England knows it's choking off growth too, because its own projections don't see growth returning until 2026. So why does it keep repeating the same mistake in raising interest rates as if it'll do something different, when all it does is worsen the nation's general financial outlook? We're paying a price for incompetence right now. By rights, we should be seeing energy prices falling, which will bring down inflation all on its own. Though, of course, that could be slowed by yet more Tory intransigence towards the profiteering energy companies and Ofgem's stupidity, which I've outlined in the last video I made. If you've not seen it, go take a look. But obviously, finish watching this one first. But there's an argument there for the Bank of England to hold its nerve. Maybe keep things where they are, because inflation may come down all on its own. Rishi Sunak certainly thinks so. He's pledged to bring it down, but actually, he needn't necessarily do a thing to deliver that pledge. Instead, though, the Bank of England has shown itself to have no balls and has come after our spending power again. Of course, blaming the Bank of England entirely for this mess may not be completely fair, because they can only operate within their own remit, of course, and it's the government who could act and do more, especially when they have to shoulder a lot of the blame themselves. But the BOE certainly is not helping. Inflation hasn't just been sent flying because of energy companies profiteering. The pandemic had to be paid for, of course, and that was right and understandable. But the Tories screwed that up, of course, through incompetence, as always, which saw us pay a heavy price in lives compared to other countries, but also through wastage and corruption. There's a VIP lane scandal, the PPE procurements for mates, the billions lost to fraud that Rishi Sunak chose to just write off. It's an exhaustive list of sleaze. But then we have to factor in the additional stupidity of the short-lived Liz Truss government, which spent money like water to give tax breaks out, for which there is never a financial return. She poured public money down the drain, in effect. She is one reason interest rates were hiked all on their own by the Bank of England, to prevent our economy actually collapsing that time. And the ridiculous woman now thinks it's time for her to stage a comeback? For God's sake, Norfolk, ditch her. Anyway, the Tories could impose a wealth tax. For example, stop the sniggering at the back. They could, because whilst we ordinary working class folk have been hammered financially, the elite 1% have accrued the equivalent in new wealth as the poorest 70% of the country. We're this fabulously rich country, sixth wealthiest nation in the world, but the fact the vast majority of us see none of it, to the point a report has just come out that the very poorest in this country would actually be better off if they lived in a much poorer Eastern European country and were poor there. That's how bad inequality in the UK now is. It is staggering. And yet still, it's that end of the wealth spectrum that gets hit by Tory dereliction of duty and the Bank of England knowingly harming the economy, most especially felt by those with the very least, knowing via their own projections that things won't change, won't improve, won't get better for another 3 years, and a Tory government knowing there's another way, but it's a way they would never, ever take. Reform the Bank of England, yes, but for God's sake, we need shot of Tory governments permanently too.